Let's switch gears here a little bit. Turning now to insurance company Lemonade. Shares of the company are falling today as investors weigh a slightly lower profit than they were expecting. But a key point that we want to pull out from this report is premiums growth. Lemonade reporting premiums per customer rose 8% year over year to $387. Here to tell us how that's impacting consumers, we've got Daniel Schreiber, who is the Lemonade CEO. Daniel, always a pleasure to grab some time with you, and thanks for joining us on Yahoo Finance. Take us into the quarter, some of the catalysts and the health of the business right now.
Great to be with you as well, Brad. Thank you for having me on again. The quarter that we just announced has really been spectacular. On pretty much every metric that matters, we're seeing everything, all the lights are green, things moving ahead pretty dramatically. So we're seeing the impact you were just talking about, McDonald's struggling with AI. Well, at Lemonade, AI is doing exactly what it's meant to be doing. We're seeing tremendous efficiency drives. Just in the last year, our business grew 22%, but our headcount contracted by 9%. Over the course of the last couple of years, we've seen the efficiency per human double as a result of all these systems. So every employee that we have is now responsible for twice as much premium as they were just a couple of years ago. Indeed, we're seeing this tremendous growth, 50% growth over the last couple of years, with a decline in operating expenses, excluding marketing and growth expenses. So we're seeing the fundamentals of the business, the scale and the advantages of scale that AI always promised are now very much in visible sight and really in evidence across our report this quarter.
Where are you seeing the highest jump in premiums? I know you have a couple different segments. You've got pet, you've got, of course, home ownership, auto as well. Where is the biggest jump right now in premiums that you're seeing, and why?
So the average premium per customer that you spoke of is an amalgam of, yes, people paying more for the same kind of policy. We did see inflation take a bite out of profitability for the entire sector, and now prices are clawing their way back up to a profitable measure. Indeed, our loss ratio came down by 15 points year on year in insurance. That's almost unheard of, and that's a reflection of getting risk and rate matched as they ought to be. That's translated into us becoming cash flow positive this quarter. This has translated into us seeing 155% growth in gross profit. So those prices coming back in line with where they need to be are having dramatic ripple effects across our financials.
Certainly. And you know, I have friends that perhaps some of them Lemonades, some of them users of different services, but all of them, when they kind of continue to talk about why they're paying higher premiums, a lot of them might not know just why. Why are people having to pay higher premiums right now?
It's really driven not by corporate greed or anything like that. We've actually seen insurance companies suffer unparalleled losses. You know, huge, big, well-known names. USAA reporting a couple of quarters ago the first loss since the founding of the company pretty much 100 years ago. And we saw that across the board. What happened was that inflation, which was rampant across the United States, was particularly pronounced, disproportionately pronounced in the auto space, in the cars, buying cars, fixing cars, getting parts for cars, and home repairs. And your two most crucial insurance products are home insurance and car insurance. And there you saw not 7, 8, 9% inflation, but oftentimes 15 to 20, 22% inflation, depending on the states. So suddenly you were sold a policy that assumed a certain cost of repair or replacement. By the time that cost came due, the insurance company was paying a lot more than they factored when they set that price. And there's always a time lag, even though that inflation has died down because of the regulatory environment. It takes a couple of years for insurance companies to get those new premiums approved. And that's what your friends are experiencing. I will tell you, those of them who are not currently buying insurance from Lemonade will probably get a savings by switching to Lemonade. We are priced lower than most of the incumbents, but the factors that you just highlighted are true really across the industry.
You're going through your own expansion right now as well, Daniel, and I saw that within some of the announcement here, the expansion in France and the UK as well here. So a lot of people perhaps over in Paris enjoying the Olympics, they may have heard some of their friends talking about that new Lemonade coming into their territory. All of these things considered, what does the expansion roadmap look like for Lemonade from this juncture?
Well, we do expect to continue to accelerate our growth. For several quarters in a row now, we've not merely been growing, but accelerating growth, and that will continue as best we can tell several quarters into the future. So we will be growing along several axes. One is geography, so launching new products, homeowners insurance that just launched in the UK and a few weeks before that in France. Adding states where we don't have products today in the United States. We'll be adding states during the course of next year as well. So definitely expanding the range of products that we offer and the territories in which we offer them. But more than that, growing with our customers. We now have over 2 million customers, most of whom bought a single policy like renter's insurance or pet insurance. They often have a car that they need to insure, etc. And we are seeing very powerful growth dynamics of growing with our customers. We've already acquired them. Those products are profitable. They've paid for themselves, and now we get to sell them some of the most profitable and highest growth products like car insurance, auto insurance, or homeowners insurance without having to invest in the customer acquisition costs that plague the industry. So all of the financials turn around once you have a large install base of millions of happy customers to whom you can now upsell more products. And that will be a big part of our expansion in the coming years as well.
Just lastly, while we have you here, I know you mentioned earlier about your employees being able to benefit from AI and how that's leveraged for productivity. How are you also leveraging this for the claims process?
Absolutely. So 98% of our claims are handled by an AI to start with. So you'll pick up your phone, you'll press a button, and you will simply talk into the phone and say, hey, my laptop was stolen, or I made a claim for my pet at the veterinary, or whatever it is. And then AI will be taking that claim. And the AI will then ask you follow-up questions. Do you have a receipt? Do you have a police report? Can you take a photo of that? Whatever is needed. In about 50% of our claims, the AI will handle the entirety of the claim, start to finish, instantaneously, right through to wiring the money into your bank account without any human intervention. We pay claims in as little as 2 or 3 seconds in those kinds of instances. And even at times when the AI, for whatever reason, isn't authorized to go the whole way to settle the claim or needs some human to look it over, they'll alert the human, but so much of the heavy lifting has been done that the cost of handling claims for Lemonade has already reached parity or best in class with the companies that are 10 and 100 times bigger than us. So incredible early indicators of these efficiencies, but it also translates into happier customers because nobody wants a claim delayed, handled slowly, bureaucracy. You want 24/7 instantaneous response, and that's what they get.
Daniel Schreiber, who is the Lemonade CEO. Great to see you as always, and thanks for hopping on here with Yahoo Finance. Appreciate it.
Wonderful to be with you. Thank you so much.
Thanks.